Good morning. My name is Jennifer Ryan, and on behalf of the Alliance of Women in Workers' Compensation, I want to welcome you to today's webinar. This webinar continues our industry educational series throughout the months of May and June. Today is our first session talking about the workers' compensation programs. It's titled Through the Lens, Designing a Workers' Compensation Program, will last approximately 1 hour and is a pre-recorded session being broadcasted today, Tuesday, May 25th, 2021. Before we get started, I would like to thank our 2021 corporate sponsors for their support on hosting events such as this. They support us not because they want their logos up on a screen, but they support the cause, which is to affect positive change in the workers' compensation industry through networking, support, mentoring, and collaboration. The Alliance is inclusive of all professionals on workers' compensation, regardless of career stage, with the belief that we can all learn from and support each other. Please be sure to head to the AWWC website for all upcoming virtual events and a few in-person events following at the end of this year. Our theme this year is Through the Lens, which will allow us to take different topics each month and focus on specific conversations that will bring value to our audiences. How do risk managers assess their business risk and ultimately design and implement their organization's risk management program? This session will walk the audience through the risk manager's role and the process related to insurance and self-insurance decisions, underwriting and insurance placement, and the role of the employer's broker partner in insurance underwriting. Today, we are joined as Kimberly George, AWWC board member with Sedgwick, hosts our session today. She is joined by panelists Janine Kral, former risk manager at Nordstrom, Kral Murphy, Managing Director, Casualty Growth Leader at Aon, and Andrea Shopher, Director, Access Underwriting with Safety National. Thank you for the time you are spending with us today, and we hope you enjoy this webinar.
Hi, I'm Kimberly George, a founding board member of the Alliance of Women in Workers' Compensation. And we're so happy to have you with us today as we kick off our 4-part series on industry education. And why industry education? It's because our followers asked if the Alliance would help lift up their knowledge on how workers' compensation works. And so we are offering this 4-part series that will really help early entrants to mid entrants to mid level employees in the industry better understand how an employer goes about creating their workers' compensation program. And so we're going to start with the session today, designing a workers' compensation program. The second session is once that program's designed, how does the claims management model look and how does it work? And then the third session will be all about service providers, those organizations who are working with us to be able to deliver the workers' compensation program. And finally, we'll talk about outcomes. How does a risk manager measure their program? So let's start with introductions, and I'll have our guests introduce themselves. Andrea, will you go first?
Thank you, Kimberly. Andrea Shopher with Safety National. I'm the Director of Excess Workers' Compensation here in St. Louis.
Great. And Kral?
I'm Kral Murphy. I'm with Aon. I'm an insurance broker based here in Chicago.
Wonderful. And Janine?
Hi, I'm Janine Kral, and I started in this industry as a multi-line claims adjuster. Then I moved to the risk management department at Nordstrom, where I stayed for over 30 years. And last year, I took an early retirement from my position as vice president there. And now I'm doing project and contract work.
Wonderful. I'm envious of you, Janine, both for your years at Nordstrom's, my favorite store, but also retirement and the opportunity to do something different. That's really exciting. So why we wanted to start with this session on design is because so many individuals in the industry really don't understand how a workers' compensation program is designed and the various options that are available to employers. This isn't going into a store and buying auto insurance or going online and just signing up. although there's some insurtechs attempting to do that. Certainly larger programs would never be able to go down that path, or an employer with complexities. But we wanted to start with this conversation to really help us understand, how does a risk manager assess their organization and begin to put that program in place? And then the broker role, because they're so instrumental in helping the employer's program come to life. And then the underwriter. No, underwriters are not adjusters. They're not processing claims. There's actually a variety of roles within insurance companies. And we wanted to have Andrea with us today to talk about that underwriting process. So that's a bit about what we'll talk about today. And maybe we can start off by sharing a little bit more with our audience about your particular role and even your company. You know, these organizations that support the employer have a lot of different products and services. And I think sometimes our industry colleagues get confused, even on the employer side. What's the difference between a risk manager and a claims manager? Or if we're at Aon, the various different resources that are supporting an employer program. So Janine, why don't you kick it off and talk about the risk management role?
Okay, thanks, Kimberly. Well, every company's risk management structure is different, of course. The risk manager's job involves identifying and assessing various types of risks and then designing strategies to address and monitor those risks. And typically, risk managers are responsible for evaluating and purchasing insurance, overseeing programs that manage insurable losses, such as property losses, workers' compensation, general liability, and then managing the financial aspects of that, the costs of insurance, the costs of claims. And then sometimes risk managers are responsible for safety, emergency, those types of things. At Nordstrom, the risk management department was responsible for all of those things: buying insurance, managing all the claims and litigation. The majority of the claims were self-administered. Safety, emergency response and preparation, crisis management, and also, interestingly enough, some legal functions, including employment counsel and privacy compliance. So there was, because the program there was self-administered, there was about 70 people in the department, which is pretty big for a risk management department and the risk management role. But there's a lot of companies I know that have risk management teams that are just 1 or 2 people. So really the size of the risk management team really impacts what the risk manager is able to do and what the role is. And it depends on the structure of the company that we can talk about later. But regardless of the size of the department, I think one of the key functions of a risk manager is to proactively build relationships, both internally within the company and externally. Risk management is truly a relationship type business. Internally, it's critical within a company, so that you can really understand what the risks to the company are, and also to be able to convince leaders within the company to address those risks. So for example, workers' compensation can be a significant expense to an organization, as well as having a negative impact on employees' lives. So risk managers can really add value to their organization by taking time to understand where and what the losses are, and then communicate those out to the business to create awareness and action. At Nordstrom, for example, every year we identified top departments in geographic regions and had a proactive approach to communicate with business leaders. So that's something that a risk manager can do regardless of the size of the company. I always think about the risk manager's role in terms of building relationships and storytelling, because it's telling stories internally in the company and trying to get leaders to mitigate risk. And it's also communicating stories about your organization to external partners like brokers and underwriters in terms of getting the best options available to address the risks and needs of the organization.
Yeah, that's really fantastic. There's so many nuggets in there that I could speak to, but you mentioned self-administration, and for our audience, in our next session on claims management. We'll dig deeper into the different claims models, self-administration, outsourcing your claims to a third-party administrator, or having insurer in a bundled program. And so we won't dig deep into that today, although it may be touched on in the conversation, but just know that that's coming. I think the other thing to keep in mind, if you're trying to sell into the workers' compensation system, you heard Janine describe a vast array of responsibilities. It can be quite expansive. So know who your audience is, because a risk manager may have other people on her team that are actually focused on the services. And that's part of why we're doing this industry education, to really help people understand roles. And hopefully by the time we get through this series, a bit more about who the right resource is for you and just general knowledge. So thank you for that, Janine. It was a great explanation. And Carol, let's have you talk about Aon. What a big company and growing. And there's so many different aspects to Aon and a broker as well. So why don't you share a bit about your organization in a broker role?
Sure. And I'm a specialist in, very large clients like a Nordstrom and working with companies like Andrea at Safety National. But there's a whole variety of clients that need workers' comp insurance of varying sizes, right? So while clients that I serve are often in multiple states, you might only be in one state or even one premises for operations. So there's a wide variety of sizes, and Aon serves clients at most size points, but there is a distinction between what's an insurance broker and what an insurance agent is. With larger customers, it's almost indistinguishable in terms of the behavior, but technically, insurance agent represents several insurance companies and works with clients to understand their needs and place insurance appropriately with those companies. With an insurance broker, we're actually contracted with the customer. So we would represent a customer like a Nordstrom, and then we would engage with virtually any company, like Andrea Safety, and work out insurance arrangements for large customers. There's not really, there's very little activity in terms of direct writer insurance companies in this space. And that's because the programs there's complexity. And it's hard for clients to understand all the ins and outs of workers' comp and how to maintain relationships with the different insurance companies. So we facilitate and help that process for clients like Janine. I'm specifically a broker. I know, Kimberly, you asked about what are the different functions. So I am, some of the people at our company that are not specifically brokers are always jealous because we're referred to as an insurance broker. But I am an insurance broker, meaning I negotiate, I'm licensed under state laws to negotiate with insurance companies on behalf of clients. But we offer multiple services around that. Of course, there's multiple other types of insurance besides workers' comp. There's consulting. I know there's going to be another session on claims, and we have, just wonderful consultants that can help customers navigate the ins and outs of claims and the best way to handle those. We have consultants that provide, risk control consulting or coordinate with carriers like Safety National to develop risk control strategies with a customer to keep their employees more safe. And we even have outsourced risk managers that we can provide on a consulting basis to certain clients. There might be a smaller organization that maybe can't support a full-time risk manager. So they could come to us for someone that maybe they use, 2 or 3 days a week, and that person also serves another customer. So those are just sort of the beginning of what we can do at Aon. We really consult around multiple areas around risk and people, but with respect to workers' comp, that covers it.
Yeah, that's wonderful. I think when some of our audience contemplate career moves, they don't always realize the opportunities that are available to them, whether it's in an organization like mine at Sedgwick with such an enormous amount of career paths, and the way you just described Aon, certainly a lot of career paths. I know Janine and I had a conversation as well with young entrants, graduates coming into, an Aon or a Marsh or an insurer. And I think for those of you in the industry thinking about, opportunities, hopefully this isn't just about industry education, but you can really learn more about some of the opportunities that are out there, because I know all of us have had great careers with insurance, and we certainly want to keep our new entrants into the market and bring more. So thanks for sharing that. It's exciting to know so many different opportunities that Aon has. It's great. Andrea, why don't you talk about underwriting and potentially even how underwriting fits in your company, Safety National?
Sure. I think that if you ask many in the industry, what do underwriters do? Their first response is probably ask a lot of questions, because there are, a couple of key factors in the underwriting role that we need to achieve. The first is reviewing a company's financials. That's more important, depending on what kind of workers' compensation product a client decides to secure. There are three main different types. So that's guaranteed cost, or you may hear first dollar, primary. And essentially what that is that there's 100% risk transfer from the client to an insurance carrier. So they pay a premium and all of the losses are paid by the carrier. You can also have a large deductible or deductible program where it's similar to, your healthcare deductible, where you're responsible for a certain amount of your payments that go out during a specific year, and everything up and above that deductible, that's when the insurance carrier will pick in. My role as an excess, or you'll hear SIR underwriter, is the client will retain a certain amount of claims, each claim, let's say 500,000, and then Safety National will come in and reimburse any payments on a per occurrence basis up and above that 500,000. So why are financials important in that situation is, for a large deductible scenario, if for some reason the client was unable to pay that deductible amount, well, then that's when the insurance carrier will come in and pay those claims in the deductible world. So we need to determine what your financials are in case of that scenario, and you may hear the word collateral. So based on a financial review of those scenarios, based on your exposure, then we may have to secure what's called collateral. Now, SAR is, structured similar than a deductible, but that financial review is really done on a state-by-state basis to qualify for a self-insurance program. So financials are very important, but overall experience and exposure for an underwriter, that's what we focus in on, because it's understanding the exposure of a company. And what do I mean by that? It's what you do and where you do it. Nordstrom is a great example. It's a retail store. We can, really kind of understand what retail entails, right? You have customers and employees on the floor interacting. You have warehouse. You may have distribution. You have, people working in the home office on a clerical basis. So all of that is the exposure. And, a retail space in, St. Louis, Missouri, and a retail space, in a high rise of New York, you would view that quite differently, because again, it's where are you doing it? The exposures are different in St. Louis than in downtown Manhattan. So, what do you do with that exposure? You assess what you call a rate, and you can do that by each individual job responsibilities for a client. So, for example, retail, and then you'll have trucking, and then you'll have, home office people. So all of that is understanding the exposure. And, your exposure today could be quite different than what it was a year ago. You could have people just working your home office, and now during the pandemic, you have a lot of them working from home in their home environment, maybe in a different state. So it's really important to have an overall understanding and encompassing knowledge of what the exposure is. Secondly, we look at experience of an account. You may hear experience modification factor. And what experiences is your loss experience or your claim activity that you've had year over year. And what that does is it tells a story. Janine says, tell a story about the account and what each individual employee's roles are. Well, the claimed experience is what an underwriter will use to tell the story of potential loss. And what we need to know is what our losses today and what will they look like in the future. Because ultimately, our job is to ask those questions and get that information and analyze an adequate premium to assess on each individual risk. But your responsibility as an underwriter is to make sure that there are claim dollars to pay those losses in the future, but ultimately, maintain the integrity, the financial integrity of Safety National or whatever carrier that you're working for.
Yeah, that's great. I think now that we have that background, we'll be able to get into sort of what it takes to design a program. And Janine, why don't we start with you? Maybe you can share with us how you assess risk appetite, and then maybe even get into the culture of an organization around risk and the way they consider potentially risks that are variable versus fixed, and how you go about assessing that before you then get a broker involved.
Yeah, company culture and just the general company goals are really critical to determining how a company wants to manage risk. And so it's really important that the risk manager understand and build programs around their own company goals and culture, and this, as well as the specific risk tolerance of the company. So again, I keep using example of Nordstrom because that was my life for 30 years. But at Nordstrom, the culture was built around customer service. So that was a very important factor when deciding how insurance programs were built. For workers' compensation, the decision was made years ago to be self-administered, handle the claims in-house versus using an insurance company or a third-party administrator, because that was the culture of the company. Employees were expected to serve customers to the utmost extent. And so the company really wanted Nordstrom employees supporting their own employees when they were hurt. So Nordstrom decided to build a really strong advocacy program around taking care of injured workers, again, because that was a natural part of the culture. And then preventing injuries was a very important part of the culture, because caring about your employees. So safety was a key part of the worker compensation overall program. Every injury investigated from a prevention standpoint, and then a feedback loop to the stores and operations team. So that was part of the culture. Some organizations may not have the capacity or the want to invest as much into safety or other safety programs, or perhaps they want to keep it separate from the risk management or from the workers' compensation claim program. And then also reputation risk, I think, is a key factor for risk managers to consider. Of course, every company cares about their reputation, but some may be a bigger deal than others, to the extent that they want their insurance programs to allow them to have more control over their claims, control over who defense counsel is representing them, control over settlement decisions. Some organizations may decide they just don't have the capacity to be that involved, and they don't really care. There's not a right or wrong, but they want to have a trusted insurance carrier to do everything for them, and then they don't have to worry about it at all. They just take the financial side of things, and that's pretty much it. And of course, the finance side of things is very, very important factor for risk managers to consider when building their programs. Balancing the retention program options with insurance to address the impact of the different losses that can occur. So understanding the company's financial risk tolerance as well as the overall finance strategy and goals are really critical in this regard. How much risk can the balance sheet allow? What tolerance does the company have for variable expenses versus fixed expenses? Which leads into what type of a retention, and if a retention, what type of variable expenses, do you prefer variable expenses or do you prefer fixed insurance premiums? Another thing to consider is the company willing to invest in staffing for a risk management department, or is the preference to outsource and pay third parties? Again, the self-administration decision at Nordstrom required a commitment to staffing, and some companies aren't willing to put a lot of labor into the program. And then how the company manages and tolerates the claim liability adjustment is a huge factor. Prior year claim adjustments can have a significant impact on the company P&L. So can the company handle that variability where, whether it's a surplus or a deficit, it's still a variable thing that a lot of finance people don't like. So claim liability projections, it's not an exact science, and wide swings up and down can raise a lot of questions about the claim program. And so risk managers really need to have a good understanding of the finance strategy, the risk tolerance, and also a really strong partnership with their CFO to ensure that the trust is in place to withstand any financial issues that can arise, because they inevitably over the years, something will arise where there's something crazy in the reserves or whatever. So culture and company goals is really an important part of the decision, the information that needs to be shared with the broker and the insurance community to be able to help package what program would work best.
And when you get ready to engage a broker, and I understand that there's partnerships, but so maybe I didn't begin that question in the way that it makes the most sense, but what would you begin to package together or think about? Are there some key points that that a broker needs to have, or is it a lot of conversations? How do you go about delivering what you understand about your company and what you desire over to the broker so that you can begin collaboration?
Well, like Andrea said, the claim experience, the data is a lot of it.
Okay.
And then information about the company itself. As Andrea said, what changes? COVID has, there's a whole new story that has to be told about companies. So packaging information to say, yeah, a year ago we had X, but now it's Y. So for retail, there's probably a lot more online business than, the brick and mortar might have been impacted in some way. So sharing the company, what's happening in the company, and then the claim program data. Has anything changed with the way the program is being managed? Is there a TPA? Are you still self-administered? What are the claims? What's been happening? And I think the other key thing is, what is the company doing to mitigate the risk? What did you do from a prevention standpoint to mitigate the risk, for example, of COVID?
No, that's
a question.
Yeah, it's perfect. That was very helpful. And now we're on to Kral, because we want to hear about what the broker does with that, and what goes into your planning and assessment and support for the employer.
Well, I love what Andrea said about understanding this story, so you can share the story internally, and what Janine said about understanding what the direction of the organization is and senior management and how they think about the goals of the organization. Because what we do as a broker is we try to put that all together to explain that story to an underwriter like Andrea, to help with any claims facilitation or with excess carriers or things like that. So we try to help understand that story. And sometimes the story changes, right? There can be changes in management there at the client. There can be changes in direction. And so that can change the story. There can be really positive changes. So we want to tell Andrea if, maybe there was, a legacy practice at the organization that was not successful with reducing injuries to employees, but now new programs have been implemented. Like, we're going to want to communicate that as part of the story. So a lot of what we do, especially with larger companies, is we work with actuaries, which is another discipline. Both at the insurance companies, there's independent actuaries, and there's actuaries that we have at Aon that help identify the costs by state, because workers' comp is a multi-state system. It's regulated by state law. So it's not a consistent federal scheme, which, that creates a lot of complexity. So one of the things we do with customers like Janine, if they're working with multiple states, is stay on top of regulatory changes. So might be that, for example, in Texas, clients can non-subscribe to the workers' compensation system and have an employee injury plan that protects their employees from injury. So that's an option that's available in Texas for some larger customers. There's, self-insurance, which, Andrea mentioned, which is, you're large in a state and it can be very cost efficient to just be a self-insurer and handle your routine cases, within, the smaller cases, to handle those with your claim administrator or with your carrier, to handle those, but not requiring direct insurance on that piece. And then in many other, most circumstances, clients with a lot of claims in a particular state will be in a deductible program where they're also similarly taking a portion of the risk for the claims that are more frequent, and then buying insurance for claims that are more, catastrophic in nature. So we work on those design aspects with the customer and help them understand what best fits their organization and the needs that the CFO or senior management have communicated, and the philosophy of the organization in terms of claims handling. And most organizations are striving to be best in class. Most organizations want to have healthy employees, and that those organizations are also strong financial performers. They're also have great wellness programs. They also have engaged colleagues. So it's, workers' comp is it's sort of intrinsically linked to the success of the company, really. This is a big area. It's a big cost, but more importantly, as Janine said, it's about, having a terrific brand reputation and having your employees feel fully engaged in the organization and promoting a positive culture.
Oh, so much good information there. Many of our audience may remember when the Alliance had an emerging trend one year on creating an advocacy-based claims model. And I think that what you've heard from Janine as well as Kral just reiterates that's really important. We may have created that, 5 years ago, but there are so many employers that had that culture previously, but others are now adopting it. And I think, Kral, it's so true that workers' compensation can be there to care for the injured and help facilitate through. And I know that's the culture from Nordstrom's, or it can really drive people out of the organization as well. And with the talent needs that organizations have, it's just more important than ever. And it's great to hear from a broker. It's not just case managers. It's not just, the claims adjusters being told, about advocacy. This is at the core of the design of a program. I have a question, and it's okay if you can't answer this, Kral, but people don't always understand a captive. So I know we didn't plan to talk captives today, but is could you just describe at a high level what a captive is and maybe why some employers use a captive as a part of their program?
Absolutely. So a single parent captive is when a client organization forms their own insurance company, really, to handle their risks or the retained risks of the organization. There can be multiple reasons to do that, but a very common reason is if maybe there's certain subsidiary companies that are smaller, or they might represent a different risk profile, and maybe they want a lower deductible level or guaranteed cost insurance, something that's different than what the parent company is doing. There might be an opportunity, some clients use captives to protect like franchisees or licensees. Those are not technically part of their corporation, but they're important to that brand reputation and that they have good protection and financial protection. So that might be a way to provide that. It also can, another sort of a little bit more esoteric subject is reinsurance. That's a big business for Aon as well. Reinsurance is insurance behind the carriers. So you can think like if there's unfortunately, like a terrible industry event, like terrorism, let's say, that would impact multiple clients and multiple insurance companies. Something like reinsurance can protect the insurer, share the risk with the reinsurer. In the case of a captive, the captive can access certain reinsurance companies directly, if that makes sense. Maybe your insurer has a retention of $1 million, but your subsidiary wants a $250,000 deductible. You may be able to place that in the reinsurance space behind the captive if you can't secure it with your underwriter, up front.
I was going to ask you about reinsurance, so that was perfect. I think just that little added amount, it's not just typically one insurance company or one type of program. There's layers that make the programs work. So Carol, can you just talk about how you then get underwriters involved? And then we can transition to Andrea. But as you've heard from the employer, you do your assessment, then how do you get the underwriters involved, or how do you choose which ones that would meet have the market that you need to go after for the employer's program?
Sure. No, absolutely. I mean, typically we would be discussing with the client which companies to approach, and there might be certain attributes of the program, like Janine mentioned, self-administration. That not every carrier will work with that structure. So it's something to understand, what are the carrier's strengths? How do they match up with what the client is looking for? And then, of course, we make recommendations, and we have, sort of vast knowledge of the insurance carrier's capabilities. But we also reach out to underwriters and ask them, of course, in conjunction with a client, we might say, hey, Andrea, how do you feel about a client in this industry with this, they're in these states, and this, there might be a more challenging industry, things that are more hazardous. Andrea mentioned classifications of operations, what the employees are actually doing, things like mining and other areas, can, naturally be more hazardous. So there might be a more limited pool of underwriting carriers that are interested in that business. Generally, there's carriers for all types of clients, but it's just, making sure that the fit is right. And then we typically, casualty insurance, workers' comp insurance tends to be long relationships. There's financial benefits to staying with a carrier for a long time in the way the programs are structured. However, most clients do require competition every so often. So we will go out to other carriers and say, have those conversations, are first with the client, which carriers does the client feel are a good fit? And then with the underwriters to make sure they also are interested and feel that it's a good fit and within their risk appetite from their client base. So we have competitions and see who puts together the most compelling proposal for the customer, and then customer considers it's not just price, it's a service, those attributes like the risk control and the claim service, and how the carrier will cooperate with, sort of work together on claims and be supportive in that way. So there's a lot to it. It's not just cost, but it's a very complex decision.
Yeah, no, that's really helpful. Really helpful. Thanks for digging a little deeper into that. And then Andrea, once we've had the employer understanding their risk appetite and their culture of the company, the program design from the broker, it moves over to you. So talk about your process.
Sure. I can't, relay how important that the relationship with, a client and the broker is transparent. Nobody likes surprises, especially if, a potential claim should happen. So it's very important to have a great relationship between those two parties. So when, one piece of paper hits my desk on this client, then everyone has a great understanding of again, the exposure, the experience, and what type of product are they pursuing? Are they looking for an excess workers' compensation or a large deductible? So typically that all takes place prior to, we call it a submission, and will hit my desk. So once that does hit my desk, we do an overall analysis that can involve research on OSHA websites or the Department of Labor, to get a little bit more detail on their specific company, perhaps. Additionally, we'll use, I think Carol mentioned actuarial models, and what they will do is they'll take an insured's claim history, and what we do is we'll project it out to see, okay, what are the anticipated losses, our anticipated liabilities that we may incur with this particular risk over, we'll say, 10 years. So when we do that analysis and we look at their exposure, we come together and formalize a premium charge. And typically, based on what the client and the broker is proposing, we may add some additional endorsement or expansion of a typical policy. Let's say they're working on water. Perhaps they want USL&H coverage, maritime, things like that. So that's all in the negotiation process, usually between myself and the broker. Sometimes we do speak as an underwriter direct with the client. That relationship can happen depending upon, the availability, if that relationship is wanted. We can have conference calls. That happens quite often on a larger new business account where we want to meet the people. We want to meet the decision makers and get a better understanding of their company, because again, the story is words, and a lot of times, meeting and experiencing their culture, getting to know them as, not as a client, but a relationship. Because again, it is very long tailed. So you want to make sure it's a good fit on both sides. And sometimes I'll admit it, as an underwriter, we look for red flags. So we look at the broker and the insured to trumpet their praises. So, maybe we do have some, gnarly looking things that happen here, but this is how we addressed it. And this is how we were moving forward. And, it's a better program now than it looked like 3 years ago. So that communication is just so important because it goes beyond the words of the application or what I can read on the claim notes. So that's a key aspect on reviewing an account, is to go beyond what I see on paper and get additional detail and a full round picture on how to assess this risk properly.
And Andrea, I suppose there's quite a variance in how long the underwriting process takes depending on complexity. But is there an average amount of time? Is this days or months, or what are we looking at?
That's a very good question. The underwriting process and the quoting, it is very cyclical. We all look at quarters, 1/1, 7/1, 4/1. So there could be an influx during those times of the year, but typically, between the time something comes in the door and it hits my desk and then I, provide a quote offer, I would say a good average would be 2 weeks. It's probably a good average, depending on how many questions do I have to ask, or how many questions does my team need to go back and ask for some more detail. But I think 2 weeks is a probably fair turnaround time.
And I know that there's people in the audience interested. What's your background? How'd you get into underwriting? It's such a unique aspect of our industry.
It is. It's very unique. I will admit, when I first applied at Travelers, I was at Travelers before I came to Safety National. I wasn't aware of what an underwriter was. It sounds, very intriguing. The name itself, it's kind of like a superhero, underwriter. So I started out in what was called probably the worst acronym in insurance, the MIMP program, MIMP. It's an injury management program. It's state specific for those that are on the smaller side that may not have the robust risk management department. So it was general, consulting offerings from this carrier to give knowledge of how your claims will affect your premium. And it's essentially expected or actual over expected. So that was my first, kind of toe dip into the work comp world. And then during that time, it was, early 2000s, the market switched and Travelers was opening up their underwriting educational, training session. So I became part of that training session and found out that I just really loved it. There's something about it that clicked with me. I think it's kind of the analytical side and also the relationship side, that the interactions that you have. It's not just, looking at numbers. So yeah. I just hit the ground running. And, within 3 years, I was a senior underwriter and going on my 20th year now of work comp underwriting. So it's hard for me to believe, but I still love it.
Well, you know it well, and that was helpful to understand. I think people don't always know how to get into some of these positions. So thanks for sharing. And Janine, I want to come back to you now that we've sort of gone through the process of a design and placement. What are some of your thoughts on either what you do once the information comes back to you or the process in general?
Yeah, the process in general, I was just reflecting on what Andrea said about the importance of communication. And I do agree that if possible, it's helpful for the risk manager to talk to the underwriters directly in addition to the brokers, and communicating, like if we get some quotes back that we feel like are unreasonably high and our loss experience wasn't bad, and we are really questioning it, those would be the times where we would say, hey, can we just talk to somebody? Can we find out why Andrea raised our rates so much? And I find that having those conversations are really helpful. And oftentimes, maybe the underwriter will take a different look and didn't understand something in the numbers. And I've also found that if risk managers are open with, yeah, this happened and it was bad, or this could be happening, that oftentimes if you have a long relationship with an underwriter or a specific company, that they're willing to say, okay, that's wonderful that you shared that. That shows some trust that you're willing to disclose some of this information. But again, taking that information that's proposed and looking at all the different options, and it's really hard because there's so many different avenues you can go with the programs. But I think it does go back to what is the culture, what are the needs of the company, what is the financial picture looking like? Do we need to lower limits because we really don't have the money right now to deal with the high rates? So I think it's just looking at all the quotes and all the proposals And if we think there's an issue, can we talk to the underwriter, and then going back to the drawing board and saying, okay, which one do we pick?
No, that's really helpful. There's a lot of complexities to it, but the transparency seems to be one of the key themes: communication and transparency, and I would say a third being partnership. Carol, do you have some final thoughts? I know we're nearing our time to wrap, and as you reflect on what we've talked about or want to add anything?
Well, I was reflecting on the career path. It's funny, I started with Travelers too, after being in college, and I started as an underwriter, handling, business like Andrea's now, and as a trainee. And I really have enjoyed my career. I mean, I felt very fortunate. I'm analytical, but I also like the people aspect. I mean, it's very much a people business. And as Janine and Andrea both said, putting the parties together, understanding people's perspectives just creates a better result for everybody. So we absolutely advocate for that relationship building with the underwriter, with the carrier. And, clients like Janine, and, Janine mentioned it's very thoughtful. Even if, let's say, you have 5 different proposals from different insurance companies, and one of them is twice as expensive, it would be easy to just dismiss that. But thoughtful clients want to understand why. What did that underwriter see that is different than the other ones? If we presented all the same information in a transparent way. So I think it's, communication, it's a people business, and, coordinating on the claim side as well, making sure all parties are in the loop and have the information that they need to make things go smoothly.
Yeah, excellent. Final thoughts from you, Andrea?
Well, again, I think we all said, tell your story, be transparent. When you do so, you'll get the best offerings from each carrier.
Yeah, that's excellent. I'd be remiss if I didn't thank Janine for being part of our Employer Advisory Council. So the Alliance has an Employer Advisory Council so that we understand the voice of the employer. All of us are in this industry, but if not for employers and that unfortunate accident that happens on the job to an employee, we wouldn't have our careers. And so the Alliance believes in the voice of the employer. And so Janine's not only helping us today, but has helped us with content for a number of years in her role. Andrea was one of our very first ambassadors. So we have local ambassadors that help bring our content to our followers in their particular geography. So Andrea has been a part of the Alliance for a long time, and we're always appreciative of Aon, who often sponsors our local events. And we have wonderful participants like Kral that join us around the country and help share their expertise. So thank you so much for joining me today and all of our audience. And for the audience, I know I mentioned our upcoming sessions in this industry education series, but I'll add dates to it. So our next session on the claims management models will take place June 3rd. On June 17th is our service provider partnerships, and we'll wrap on July 8th, measuring performance. As you may know, our sessions are available on demand. So go ahead and register. And if you're unable to attend the day of the event, you'll receive a link via email and be able to participate that way. So thank you again, Janine, Kral, Andrea. Your information was fantastic. And we'll follow up with you soon, as I'm sure we'll have some questions and people interested in the opportunity to learn more. So thanks for your sharing today.
Thanks, Kimberly.